All right. Hi, Samir. How are you? We're just going to be starting shortly. Just want to make sure you can hear me loud and clear and see my screen as well. You should be able to see the INFX presentation slide, the first page of the slide showing webinar series live training session. And do take note, you can drop your questions anytime in the chat box or in the Q&A panel should you have any questions along the way. All right. All right, just a little bit. We just got a few. We'll just wait a few more minutes, and we'll start at 6 o'clock. I was sorry, in 4 minutes shortly. Right, testing, testing, test, mic test, 1, 2, 3. Okay, I think everything looks good. All right, hi everyone. Welcome to today's webinar series brought to you by IronFX, where we'll be conducting the live trading session. I just want to make sure all of you can hear me loud and clear and see my screen as well. You should be able to see the first page of today's presentation slides. All right, and do not hesitate to drop any questions that you may have in the Q&A chat box, as well as the Q&A window, as well as the chat box as well. All right. Okay, without any further ado, before we start things off, of course, do take note of the disclaimer. Uh, all the products traded on IronFX are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. Also, do take note that the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. Right. My name is Ketan Ramesh Chandra, and this webinar series is brought to you in a special partnership between IronFX and Everest Fortune Group, where we have been the best finalists. We have been a finalist for Best FX and Equity Research for the following years, 2019, 2020, and 2021. All right. Before we head on over to the charts and trading view, let's just take a quick look at some of the key economic events that were up this week. Of course, overnight we had a FOMC meeting that took place, which had a huge impact on currency markets as well as on a direction of gold as well. And not only that, not only currency markets, commodities, but as well as equity markets. And coming up shortly, we've got the BOE meeting as well today in a couple of hours, followed by the ECB as well. And then we've also got unemployment claims. So all of these events coming up are definitely going to have another huge impact on currency markets, commodities, as well as equity markets. And it's definitely going to create a very volatile period over the next 2 to 3 hours. All right. So as you can see, the federal Fed funds rate was held steady at 5.25 to 5.5% for the third meeting in a row. So this is basically the third pause that the Federal Reserve has conducted. Just a quick summary of the statement and the press conference overnight. So as we can see, this is the Federal Reserve or the Fed has kept the target range at 5.25 to 5.5% for the third consecutive meeting. The statement has stated that the committee will assess the extent of any additional policy firming, while the dot plot points to 3 deeper than expected rate cuts amounting to a total of 75 basis points in 2024. So what this statement means is that what it's trying to tell us is that the statement itself was very dovish as well, because as in seen in previous FOMC meetings, there was no indication of rate cuts being projected in 2024. But however, in the latest statement, we do see a deeper than expected rate cuts to be expected in 2024. And following which, we also had the press conference where Chairman Jerome Powell also explicitly stated that policymakers are now very focused on not making the mistake of keeping policy restrictive for too long as inflation falls. So we've seen CPI data and PPI data fall steadily over the last 8 to 10 months, and there has been a good that has actually provided some much relief to Chairman Powell and the other committee members, because that shows that the effects of higher interest rates has helped to bring down inflation. Right. So to summarize this briefly, this was the most dovish FOMC statement and press conference till date, which supports the view that the Fed is done raising rates and the peak has been reached. So what this means is the Fed is no longer going to raise interest rates, and we can now expect them to at least begin to cut interest rates, perhaps in the early part of 2024. So this means that U.S. Treasury yields are going to fall. The value of the U.S. dollar is going to fall as well, right? So that means, of course, currency pairs such as the euro, the pound, and the Aussie and the Kiwi will rise. Gold prices should rise as well, and falling treasury yields as well as falling value of the US dollar create looser financial conditions. That means this provides a boost or a bullish catalyst for equity markets as well. So that's why we've seen equity markets rally very strongly overnight. All right, so coming up, the Bank of England is also expected to maintain its official bank rate at 5.25%, right? So we could also see a very dovish or neutral outlook by the Bank of England itself. And if that were to happen, we could see the pound give back some of the gains that we've seen over the last 12 hours or so. Similarly, the ECB is also expected to keep its main refinancing rate on hold at 4.5%. Similarly, if their statement and the press conference by ECB President Christine Lagarde turns out to be neutral or dovish, this could also impact the direction of the euro, and we could see the euro give back some of the gains that it has that we saw over the last 12 months as well, 12 hours as well. Okay, unemployment claims is up today as well. How can we interpret this data and what does it mean for the dollar index? So basically, when you have unemployment claims falling or trending lower, as you see for most parts of 2023, or rather the second half of 2023, remember this data is released on a weekly basis. So when this data is trending lower, it means that there are less Americans filing for unemployment benefits, which signals that the US labor market is robust, right? So if you have a scenario where uh, okay, when it's trending lower, that means the labor market is robust, and this would usually provides a bullish catalyst for the dollar index, right? So that means the value of the US dollar goes up, so hence the dollar index goes up, and currency pairs such as the euro and the pound fall. Similarly, as what we saw uh, in the second quarter of 2023, where we had unemployment claims trending higher. So this means that there are more people or more Americans filing for unemployment benefits. So that suggests that the labor market is showing some cracks. So what that means is uh, with the labor markets probably starting to weaken, that means the US economy is not stable. So that could potentially impact GDP figures and corporate revenues. So that means the value of the US dollar typically would fall in such a scenario, right? So that is what we are seeing now. As you can see, the last few weeks, unemployment claims have started to trend higher. And if this trend continues to move up, then it could potentially act as a further bearish catalyst for the US dollar. So combine this with the dovish statement and press conference by the Federal Reserve, we could see an additional factor for the US dollar for the value of the US dollar to fall. All right. Okay. With that, let's dive straight into the charts on TradingView. Right. So as you can see here, I'm on the 4-hour chart for the dollar index. Right. So as you can see, the impact that the dovish statement and press conference had on the direction of the dollar index, right? It was trading at about 103.80 prior to the release of the statement and the beginning of the press conference, and it dropped easily 103.80. Yeah, it dropped about 110 pips within a few hours, right? So you can see how strong the impact the FOMC statement and press conference can have on currency markets. Now, with that, let's do the analysis together, right? So, of course, with uh, with the dollar index breaking below what was previously the first and second support levels, do take note these levels were all identified prior to the release of the FOMC statement, right? So let's just do the analysis together now and see where the applicable levels could lie. All right. So first of all, of course, this Fibonacci retracement is no longer valid. What we can do is try and use a Fibonacci retracement from this swing low here up to this swing high, which is the absolute high, 104.263. Okay, so the absolute high is here. So what we're going to use here, we're going to use the extension levels, which are at 127 and 161%. Right, these extension levels help us identify potentially how far the dollar index could fall. And we can also see if these values, these extension values line up well with any of the support that we can see. All right, so what we can also see here, right, let's just get rid of this and start afresh. Okay. And also because we've seen price move higher. Okay, no, wait. We'll just focus on the support first, right? Since price is falling quite rapidly as we speak. So with 127 around here, you can see that, right, this level itself is pretty, I would highlight this level here, right, as an intermediate support. As you can see, price bouncing of this level here on, let me move this toolbar down, price bouncing of this level on 29th of November, and once again, briefly bouncing off this level as well early this morning. So this is a pretty decent intermediate support level, but it's quite likely it's going to get taken out later today or by the end of today. Now, where could the first support level lie? The first major support, right? We can see that price has made a pretty decent swing bounce here, right? So we can see price making a pretty significant swing low here before bouncing higher. So this is where the first major support could potentially lie for the dollar index, right? And this level at 102.12 also lies pretty close to where the 137% Fibonacci extension level lies. So this is more of a support zone rather than an absolute level. So this is where this first support zone for the dollar index lies between 102 and 102.12. Now, if you look at the next support level, where could the next support level be potentially? We do see a pretty decent overlap level here, right? If you look at this level here, which is 101.46, we can see price making a significant swing high here on 25th of July, then making a pretty decent swing low here before bouncing much higher. So this now becomes an overlap level. So this level at 101.46 now becomes an overlap level. And this is a good level to identify for our second support. All right, so let's get rid of these annotations. Right, and we can also see that this second support once again lies pretty close to where the 161.8% Fibonacci extension level lies. So once again, this is now a support zone. So we have identified two major support zones for the dollar index. The first of which is at 102.12. The second is at 101.46. And we have also identified an intermediate support or a pullback support at 102.46. Now, these are the support levels now based on the current price action. Now, what about resistance, right? We can see price making a pretty decent pullback here. So remember, what is a level which previously acted as pullback support could now potentially act as a resistance once price breaks underneath it. So this level here at 103.15, which is what we could use to identify the first resistance. And once again, we see price making, this is one significant swing low here. We can see price making another significant swing low here as well. So this was on 7th of December. So this level at 103.54 is where we can identify the second resistance. All right, let's see if there's any Fibonacci retracements that we could use as well. All right, okay, with price. Let's see. This part doesn't cap the trend line doesn't capture the market structure very well. Do remember that whenever we draw Fibonacci retracements, whether it's a downtrend or uptrend, the trend line here, which is this blue dotted line, should capture the market structure as closely as possible. However, in this case, we can see that this part here on 6th November from 3rd November all the way till 7th November, we can see that price the trend line doesn't capture the price structure very well. So I'm not inclined to start it from there. Whereas over here, this looks like a much better pace because we can see the trend line capturing most parts of the market structure pretty well. So let's see where all the Fibonacci retracement level lies for this retracement. So we can see do any of the retracement levels line up to any of the uh, graphical levels that we had identified. Nope, it doesn't. So we're not going to use Fibonacci here. That's fine. We don't have to force a Fibonacci level onto our analysis if there's nothing to work with, right? That's more is what is more important to find, to identify significant resistant areas and support areas in the forms of significant swing lows and significant swing highs, because that allows us to identify higher probability or higher uh, or stronger support levels and resistance levels. All right. Okay. Anything else? Okay. I can probably try a Fibonacci projection. So we're going to start this projection from the swing high here on 10th of November, going down to the swing low here on 29th, ending with the swing high here on the 8th. We can also see that the 61.8% Fibonacci projection and 78.6% Fibonacci projection align very well with the extension levels. Right, so this acts as an additional factor to the significance of this support levels. Okay, trying to adjust the labeling. Yep, this is better, so it's much more visible. So you can see we have for the first support, not only is it an important, is a pretty significant support level here at 102.12. We also see the inclusion of the 127% Fibonacci extension as well as the 61.8% Fibonacci projection. So this is what we call a confluence of Fibonacci levels. Whenever there's more than one Fibonacci level at a particular price zone, this could be in the form of an extension, retracement, or projection. We call this a Fibonacci confluence. Similarly, for the second support at 101.46, we also see another Fibonacci confluence that consists of the 78.6% Fibonacci projection and the 161% Fibonacci extension, right? Okay, to the upside here, for the resistance, we can probably use the Fibonacci retracement from this swing high here on 8th of December going down to the recent swing low here. We can see that the 38 and 61% Fibonacci retracements line up quite well with the first and second resistance level. But do take note, because with dollar index falling quite rapidly now, so if the dollar index does break below the swing low here, these retracement levels are no longer valid, and we'll have to delete this Fibonacci retracement here. So just take note of that. All right, so with that, let's move on to the euro, since we do have ECB monetary policy meeting coming up. So once again, the ECB is widely expected to keep their main refinancing rate on hold at 4.5%. Right, so because of the very dovish FOMC statement and press conference overnight, we saw the euro spike from 107.83 to as high as 109.14, right? So this is almost 100 and what is this, 107, 80, 20, 130, almost 130 pips since the statement was dropped. So you can see how great an impact the FOMC statement can have on currency markets. So with that, let's try and identify the new resistance and support levels, right? Okay, so obviously, naturally, this Fibonacci retracement is no longer valid. We could probably draw it from here, but we can see that, of course, all these levels have been broken. We can probably use 78.6. Yep, we can probably use 78.6 to help us identify a support area. With regards to resistance, let's see. I think first support is fine. So first support here, why is that the case? Because we can see price running into resistance here on 14th November, then on 16th of November as well. And once price broke above it, it found very decent support here on 22nd of November before bouncing higher. Similarly, as price broke underneath it, it ran into resistance here on 3rd of December, 4th of December before dropping lower. So we can see multiple instances where price has reacted off this level, which is an overlap level. So that is why I would like to identify it as the first support. Okay, let's get rid of all the ink annotations. Right, okay, so first support is fine. What about the second support? Right, this is simply too far now. What could probably be a decent second support would potentially could be around here, right, which is at 108.46. Why is that the case? We see price finding decent support here on 17th November. Then as price dropped through it, we can see this wick coming close to this level again before bouncing higher. And of course, we can see it running into resistance here on 5th of December as well. So 3 instances where price has reacted off this level to create an overlap. So that is why I like to identify 1.0846 as the second support for the euro. Let's get rid of the annotations. All right. We can probably also try and use a Fibonacci retracement from this swing high here, which is on 20, 8th of November, going down to the swing low on 8th of December. Let's pull up all the fibs. We can see that 78.6 is here, 61 is here. So 61 is here. So you could argue that this is probably an intermediate resistance level here for the euro, right? Price has so far failed to break above this resistance zone here, but where price could potentially find major resistance would probably be this overlap level here, right? You can see price running into resistance here, making a swing high here on 21st of November. And then after that, as it made this peak on 29th of November, it found support for a few hours, about half a day, before finally breaking lower. So this creates another overlap as well. And you can see price also running the resistance here. So we can see multiple instances where price has reacted off this level to create a significant overlap level. So that's why I would like to identify this level here. Oops, hang on. As the first resistance. And of course, the second resistance would simply be this swing high here that took place, the absolute swing high here that took place on 28th of November. All right, okay. We can tidy up all the retracements. We just keep 78 and 61%. Right, so there we go. Okay, so much clearer now. All right, okay, so these are the current support and resistance levels for the euro on a 4-hour time frame. Right, so okay, but the thing is with the ECB meeting coming up, if the ECB statement and press conference turns out to be even more dovish than the Federal Reserve's, then it's quite likely we could see some of the gains here for the euro be pulled back, right? Or right, we may see the gains being restricted, and we could see the euro potentially pull back towards where the first support is, which is at 1.0882. All right. All right. All right. Great to see you, Kioma. Glad you could have joined us. All right. Just want to let you know, do take note, we've got a Q&A window open as well as the webinar chat box as well. So do not hesitate to drop your questions or requests for any analysis that you would like to see on any of the currency pairs, commodities, or the indices during this webinar, right? Right. Do let me know your requests early so that we have time to go through it. So we don't have to rush through the analysis and we can take our time to go through it properly. All right. Okay, so these are the levels for the euro. So do take note, we do have the ECB meeting coming up in a couple of hours today, and that could definitely impact the direction of the euros, especially if they come out with a if they come out with a more dovish statement and press conference in the Federal Reserve, we could see the euro pull back slightly. However, if their statement and press conference turns out to be relatively neutral or even somewhat slightly hawkish, then definitely we will see the euro break above this intermediate resistance and cleanly break through the 61.8% Fibonacci retracement to potentially climb up towards the first resistance at 1.0957, which also aligns quite well with the 78.6% Fibonacci retracement. All right, moving on to the pound, we also have the Bank of England releasing its monetary policy statement today. So they too are expected to keep their official bank rate on hold at 5.25%. So similarly, if we see somewhat neutral or slightly hawkish statement from the Bank of England, then it's quite likely this will act as another bullish catalyst for the pound to rise towards this pullback resistance level here at 1.2712. So as you can see, a lot of the levels were taken out following the FOMC meeting yesterday. So let's try and do the analysis together. So let's remove all the current levels and then we'll do the analysis together. All right, great to see you as well, Ola BC. Welcome to today's webinar. So do take note, do not hesitate to drop your questions or requests for any analysis that you may have in the Q&A box or the webinar chat windows, right? Do drop your requests early so we have time to go through the analysis together and we don't have to rush through it, yeah? So this could be for any of the currency pairs, commodity pairs, crosses, and even the equity indices as well. All right. Okay. We can use a Fibonacci retracement starting from this swing high here on 28th of November, going down to this swing low here on 8th of December. Right, we can see that price has already broken through the 61.8% Fibonacci retracement and is trying to reach the 78.6% Fibonacci retracement, right? So the first probably intermediate resistance, are probably identify the intermediate resistance here. Rather than an absolute level, I like to identify it as a zone. So between 1.2683 up to 1.2699, and the first resistance would obviously be the absolute swing high here that took place on 28th of November. If we look across, okay, this is actually this is a multi-swing high resistance, and we can see price running into resistance here as well. Right, so on 31st of August, you can see price making a very significant swing high here before dropping lower. Similarly, it made a very significant swing high here on 28th of November before dropping lower once again. So you can see a multi-swing high resistance level here, which is why I've identified as the first resistance. Right. Okay, so that's first. We have intermediate resistance at 1.2659, first resistance at 1.2737, and the next second resistance, should price break above these levels, would come in at about this pullback resistance level here. You can see price once again making reacting off these levels multiple times. 4th of August, 7th of August, you can even argue here on 9th of August, it reacted off this level. Of course, this week here, 10th of August, 17th August, and once again, 22nd August. So you can see multiple instances where price has reacted off this level to create a significant pullback resistance level at 1.2792. Okay, right. With that, okay, let's see if there's any we'll get extension levels that we can use as well. So we'll get rid of 61.8 because price has already clearly gone above it. We can see that the extension level at 127 also aligns very well with the second resistance that we had identified earlier. So this Fibonacci extension level acts as a supporting factor, acts as a contributing factor to the significance of this resistance, pullback resistance at 1.2792. All right, so let's just tidy up the charts. We don't need 161.8. We may get to that should price break above all these resistance levels. All right, now what about for this to the support side? Where are the support levels for the pound? All right, so if we look across this level here, we do see a pretty decent case for an overlap level here. Why is that the case? Right, if you look here, price making a significant swing bounce here on 30th of November, then finding support once again on 4th November. And then, of course, once price broke underneath it, it ran into resistance 3 times. First on the 6th of December, then on the 7th of December, then once again on the 12th of December. So you can see multiple times where price has reacted off this level at 1.2609 to create a very significant overlap level, which is why we are going to use it as our first support. All right. Okay, let's tidy up the chart a bit. Now, what about the second support? Right, there's no other major levels, so we can see here price making once again making us pretty decent bounce here on 8th of December. Then of course on 13th of December following the FOMC meeting, right? So this is another strong pullback support level at 1.2502, which is why we would like to use it as the second support. All right, okay, so these are the major support and resistance levels for the pound based on the 4-hour time frame as of now. All right, okay, and just like to repeat, we do have the Bank of England's monetary policy statement coming up in a couple of hours, so that could definitely impact the direction of the pound as well. So just to briefly summarize, if the statement by the Bank of England turns out to be neutral or even somewhat hawkish, this is likely going to be positive for the pound. So that means we could see pound dollar raise up towards the intermediate resistance zone and perhaps even break above it. However, if we see that the statement turns out to be more dovish than the statement that was released by the Federal Reserve, that means we could see the pound dollar fall, and where it could run to would be, or fall to would be, the first support. All right, so that's what we have for the pound. Uh, let's look at, we can look at dollar yen, and then we can look at the Aussie and Kiwi before perhaps moving on to oil and gold as well. All right, guys, we are about halfway through today's webinar. So if you do have any requests for any of the instruments, do let me know early, because otherwise I'll just let you know what I'm going to cover next. I'll cover dollar yen, right? Dollar yen is here. I'll cover dollar yen. Then I'll cover the Aussie, the Kiwi, and if there's time, I'll cover oil and gold as well. Otherwise, if you want me to cover any of the other instruments, do let me know early so we have time to go through it together properly. All right. Okay. So dollar yen, as you can see, with a very dovish FOMC meeting, dollar yen crash falling almost 300 pips, or more than 300 pips. It's a huge drop for dollar yen. Now let's see where are the major levels, right? Okay. We can use the Fibonacci retracement from this swing high here on 11 December going down to the recent swing low today. Let's see where all the retracement level lies to help us identify potential resistance. Right, where the 38.2% Fibonacci retracement level lies, we could potentially identify this area as the first resistance, right? And instead of an absolute level, I'd probably highlight it as a zone. All right, there's a question. All right, Babangida, for sure. Okay. We can cover pound yen after this. So after I do dollar yen, let's just look at pound yen as well, because it'll be a good the analysis should be pretty similar to the dollar yen. All right. All right. And of course, with price making a significant pretty finding support here at 140.95. I'll probably identify this as intermediate support for now, but let's scroll across. Do we see any other major support levels for the dollar yen? There is a level here. We can see price making a very significant swing low here before bouncing higher, right? So this could potentially be a major support level, but I think this has already been broken, right? Okay, price has, yeah. So you can see this for now. Okay, tell you what, I'll identify this as the first support, right? We can see just the wick just going below it, and briefly price has not cleanly broken below this level, so I think I'll use that as the first support. I'll remove this intermediate support, and we can also, okay, so right, so first support, first resistance is fine. Second resistance, if we look across, there's nothing really. Okay, we can say that this level here, we can see price making a significant bounce here on 23rd of August, another significant bounce on 1st of September. Then if you zoom in here, finding support above this level on 12th of December as well. So what was previously a pullback support level is now going to function as a pullback resistance level. All right, so let's get rid of all the annotations. So this level here at 144.62 is going to be our second resistance for the dollar yen. Okay, so we have the 61 and 38% Fibonacci retracement levels to add to contribute as an contribute to function as a contributing factor to the significance of these levels. Now, what about the second support? Right, if you look further below, we're going to zoom out a little bit. Okay, we could argue at this level here, this is how many, this would be at about 60 pips. Yeah, so not too bad, about 60 pips. Okay, so this level here could function as the second support. Why is that the case? Right, we see price finding support here on 24th July. Well, briefly finding support once, twice before finally breaking lower, then acting as resistance over 3 candles before dropping lower, and then finally breaking higher. So this does look like to be a pretty decent overlap level, which we can use it to identify as the second support. All right, moving back to where price is currently trading. If we zoom in here, right? We can try and use the Fibonacci extension. So how do we use extension levels is basically using the retracement tool, starting from this swing low here, going up to this swing high. Let's see if any of the extension levels, which are basically 127, 161, do they align anywhere? Okay, they are way down here. Do they align with any significant levels so far? No, probably just 161. You can see this significant swing low here, right? This level here aligns quite well with the 161% Fibonacci retrace extension, but not the 127, right? 127 doesn't match up well with any significant levels here. So what I would say is, should price continue to fall lower, we're not going to use 137. We're not going to use the 137% extension, but we can use the 161% Fibonacci extension to help us identify another significant support level. But that's for scenario should price continue to drop further. So let's get rid of these extension levels and of course get rid of this level here as well. Okay, so do take note, these are the uh, immediate support and resistance levels for the dollar yen based on the 4-hour time frame. All right, okay, let's move on to pound yen. Right. Okay, so pound yen, let me get rid of this. Some, of course, as you can see, we've had some of the levels break uh above. Actually, I would probably use this as the first resistance level here. Let me get rid of this. Right, okay, of course, you can see price making two significant swing bounces here, the first one of which occurred on 7th of December, and then price finding decent support here early this morning as well before attempting to bounce off this level. So that is why this level at 178.55 is a very significant pullback support level, and that's why we've identified it as the first support. We've also used a Fibonacci projection, right? This projection started from this swing high here on 24th of November, going down to this swing low here on 7th of December, and of course ending with the swing high here on, what is this, 11th of December. So we can see 78.6 is too far. We can see the 61.8% lines up quite close, or lines quite close to where this pullback support level lies, right? So you can see that pullback support level is here. So I would, yeah. So you can see this is more of a support zone rather than an absolute level, right? So with pound yen bouncing off this level, and with also Bank of England coming up with their monetary policy statement in a couple of hours. If that statement is hawkish, then we are likely to see pound yen continue to move away from this first support and potentially rise up towards where the first resistance is. Right. We can also use the Fibonacci retracement from this swing high here on the 11th of December, going down to the swing low here this morning. Let's pull up all the fibs and see what we get. Right, we can see that a 38.2% Fibonacci retracement lines up very well with the first resistance that we identified earlier. And we can also see that the 61.8% Fibonacci retracement lies quite close to where this pullback, what was previously a pullback support lies, right? So this previous pullback support is now going to potentially function as a pullback resistance. Right, so that's how I identify the first and second resistance level for pound yen. So let's just keep 38 and 61%. Right, okay. Second support, okay, we have a Fibonacci extension level as well. So this extension level, as you can see, started by using the retracement from this swing low of 7th of December, going up to the swing high here on 11th of December. So you can see that 137% lines slightly beneath, lines about 30 pips beneath where the second support was identified. So we can identify this once more as a zone rather than an absolute level. And if we zoom out a little bit, we can see that back in July, on July of 28, price made a very significant swing low here, bouncing on this level quite strongly. So which indicates that this is now going to be a major support level or support zone for pound yen, right? And this second support zone also aligns very well with the, or not very well, but aligns close to the 127% Fibonacci extension, which acts as a contributing factor to the significance of this zone. Okay. Right, so this is what we have for pound yen. As you can see now, pound yen is starting to pull back based on the current 4-hour candle. So if the statement is neutral or even dovish, then it's very likely pound yen is going to come crashing down towards the first support zone. However, if the statement turns out to be relatively hawkish, then we're going to see pound yen race towards 180. All right, so do take note of this support and resistance levels, and also do take note of how the Bank of England's monetary policy statement is going to drive the direction for this currency pair. All right. Okay, with that, uh, let's look at some commodities. Okay, let's look at gold and then oil, and then if there's time, I'll look at Aussie and Kiwi. All right. We've got about another 15 minutes or so. So do let me know if there's any other currency pairs or indices that you would like me to cover. All right. If not, let's move on to gold. All right. Okay. Let's clear up everything before we see here. All right. Okay. So of course, with the US dollar selling off very sharply after the FOMC meeting, this provides a major tailwind for gold prices. As we know, the value of the US dollar and gold prices have a negative correlation. So what that means is if the dollar is rising, that means gold prices are falling, generally speaking. And if the dollar is falling, gold prices are rising. So this is what we see over here. All right, so let's do a couple of things. Let's start off with the Fibonacci retracement from this swing high here on 3rd of December, going down to the swing low here on 13th December. Let's pull up all the fibs. Right, we can see this is a pretty decent resistance level. I would like to identify it as the first resistance level that aligns quite close to where the 38.2% Fibonacci retracement level lies. So this is more of a resistance zone, right? So we see price running the resistance here on 5th December, 7th December, and now today as well. It does seem to be running into resistance once more, right? For the third time. So this is why you can see that this is a pretty significant resistance zone or level, right? What else can we see? Then otherwise, I think the next major resistance level would probably be the body of this candle here at second resistance at 2088. Okay. So in terms of Fibonacci retracements, we can see the other retracement levels do not align uh, well or even closely to any of the resistance levels. So we'll just keep 38.2% for now. All right. Okay. Then what about support? Right. Since we can see price making a pretty decent pullback here before trending higher. Maybe I would like to identify this level here as an intermediate support level. This is not the greatest level as well. As you can see, price only briefly bouncing off this level here. So instead of identifying it as a major support, I would like to identify it as an intermediate support. Hence, we have the dotted line. All right. Okay. Okay. All right, Babangida. Okay. Yes, we'll cover Euro, franc after this as well. So after I cover gold, we'll cover Euro franc as well. All right. Okay. In terms of other resistance levels, there's no other major resistance level, so I would simply use this level here at 1973. Why is that the case? We can see price making a very significant swing bounce here, right? Swing low here. We can see a very significant swing low here before price bounce off this level quite strongly. So that's what we have. Um, we can also try and use a Fibonacci projection, right? So I'll start this projection from this swing high here, 3rd of December, going down to the swing low on 13th of December, ending with the swing high here. Well, this candle is not complete, so it's not the best place to do the projection, but let's just say in the interest of today's analysis, let's just say this candle has closed and we can do the projection. We can see where 61 and 78.6 potentially lie, right? 78.6 is over here. All right. In terms of support, we can see that price has made a pretty significant swing low here as well on 13th of November, price bouncing off $1,932 per ounce pretty strongly. And this level also aligns quite close to where the Fibonacci projection lies. So we can identify this as a zone as well. All right, okay. So this is where I would identify the second support. And we can get rid of 78.6 is not relevant as of now. All right, okay, so these are the more we can, let me see. I think we can also, let's see if we can do a projection retracement from here. Is there any 78.6% retracement that we could use? Yes, we do see, okay, price has indeed bounced off the 78.6% Fibonacci retracement. So this retracement runs from 13th November up to 4th of December. You can see that price has cleanly bounced, nicely bounced off the 78.6% Fibonacci retracement. We can also do another projection. This would start from here as well, 13th November up to 3rd of December, ending with 13th December. We can see 61.8 here. What about 78.6? Right, we can see that's simply too high. It's not relevant as of now, right? It's not relevant as of now. But should price continue to break higher, break above the first resistance and run towards the second resistance, these projection levels could then potentially have a major, could play a major part in the future analysis. All right, okay. So these are the current levels for gold, XAU, USD. This is spot gold prices. So do take note. All right, with that, let's go on to Euro franc. Okay, Euro franc, where are we? Do I have it here in my short list? Yes, I do. Okay. Right. Okay. Euro franc. Okay. This is a currency pair that I don't usually trade or analyze, but we can still go through the analysis together, right? It's always a learning step for me as well when I look at new currency pairs. So when I look at new currency pairs, or rather not new currency pairs, or currency pairs that I don't usually trade or analyze, I would like to look at it at least on a daily time frame to see what the market structure is like and what the trend is, what in what direction is the currency pair currently trending. So as you can see, since the start of this year, Euro franc has been in a pretty strong downtrend, right? I can see a downward channel as well, a bearish channel. I'll highlight it soon. So what this means is that the Swiss franc has been outperforming the euro, right? So that means the Swiss franc has been stronger than the euro. Hence, we can see this currency pair trend lower, right? So where do I see this channel? Like, all right, I'll show you here. Right, roughly, I can see this is a pretty decent bearish channel here, right? So we can see quite clearly, right, that price has respected the upper trend line of the channel multiple times, right? You can see this here on 13th of Jan, 2nd of March, 31st of May. It didn't come quite close to the upper trend, but once again, once it hit this upper trend line on 21st of May, it promptly rejected. So when we look at when we perform our analysis, it's good to perform at least for me personally, start from a top-down approach. At least start with a daily time frame, so you are able to identify the major uh, trends and buyers for that currency pairs, right? If you had simply looked at the 1 hour time frame or 4 hour time frame, we would not have been able to easily identify this bearish channel. But the fact that we have identified it on the daily time frame, we know that every time it comes up to this upper trend line, it is quite likely price is going to run into resistance. Similarly to the downside, every time prices comes close to the lower trend line of this bearish channel, we do know it's quite likely it's going to bounce off this level. So that's very important as well. So you can see that price has bounced off the lower trend line here on 13th of March, 27th of July, as well as on 20th of October. This time round, it did not bounce off this upper trend line, but it actually bounced off this overlap support here, right? This pullback support. Why? You can see price making a pretty significant swing bounce here. So what was previously a swing low support could now has acted as a pullback support. So this I would identify it as a zone rather than an absolute level, right? Okay, okay. With that, let's try and see what else can we find. Okay, we can also see Price making a very significant swing low here. So this again also is a pretty significant support area, but actually this has been broken already. If I were to highlight this, you can see that price has actually broken through this multiple times. So I think this is probably no longer relevant. What is relevant is the current support zone over here. So we have this horizontal support zone as well as the lower trend line as well, the lower trend line of the bearish channel. All right. Okay, I think we can also do a Fibonacci retracement here from this swing high on 21st of November going down to the swing low. Let's pull up all the fibs. Let's see where all the resistance levels. Can we try and identify major resistance levels? We do see a case for pretty decent resistance here where the 50% Fibonacci retracement lies. You can see, right, price bouncing off this level here on 25th of July, then 18th of August, 24th of August, 5th September, 14th September before finally breaking lower, right? So this, what was previously a strong support level could now potentially function as a strong or significant support or resistance level, right? So that's why this level here at 95.36, we've identified it as the first resistance, which also aligns very well with the 50% Fibonacci retracement. All right, similarly, if we zoom in a little bit here, we can also see that previously this level where the 78.6% Fibonacci retracement level lies, previously this level functioned as a pretty decent support level, right? This was a pullback support. We can see price bouncing off this level here on 8th of November, 15th November, 17th November, 22nd and 23rd November as well. And also you can argue here 27th November. So you can see multiple instances where price has bounced off this level. So this used to function as a pullback support level but now since price is broken underneath it, this previous pullback support could now function as a pullback resistance. So that is why I would like to identify it as the second resistance level. And it also aligns very well with the 78.6% Fibonacci retracement. So we're going to use the 50 and 78% retracement levels. So similarly, should price break above the first resistance level and start to approach this zone here where we have the upper trend line of the bearish channel plus the pullback resistance level, this could potentially once again function as a major turning point for Euro franc. And should price come up here all the way up to here, it's quite likely we may see price reverse of this level. All right, so let's get rid of all these. All right, okay. What about the second support? Okay, this was I would probably hang on. I would probably identify this as the first support right here. And I would like to identify this as a zone about here. Yeah. Okay, what about the second support? Where could that be? We can use any other levels here. As you zoom out, as you can see, wow, the last time this happened was in 2015, 2016 Euro franc. Right, this must have been an intervention measure by the Swiss National Bank. That's why we saw a huge demand for Swiss franc, which caused Euro franc to spike lower. Okay, well, let's see if there's any other way to identify. Okay, I think we'll use a projection. This projection will start from this swing high here, 21st of November, going down to the swing low 7 December, ending with the swing high here on 14 December. Do take note that this candle is not complete yet. Price could continue to rise higher. So if that does occur, that this projection is no longer valid. But let's just say in the interest of this analysis, price continues to retreat or pull back from this level and continues to fall lower. That means we then can use the 61.8% Fibonacci retracement projection to help us identify the second support. All right, and 78.6 is simply too far, or not simply too far, just not relevant in the current context, so we'll just get rid of that. All right, so these are the support and resistance levels to take note of euro franc on the daily time frame. And of course, we have the ECB meeting coming up. If once again they communicate a very hawkish outlook in the press conference as well by ECB President Christine Lagarde, then we could see demand for the euro pick up, and that would mean euro franc could very likely rise towards the first resistance at 95.36. All right, so this is how a hawkish statement and press conference by the ECB could propel euro franc towards the first resistance. However, if that meeting if that statement and press conference turns out to be relatively neutral or dovish, we could see euro franc reverse and potentially drop towards the first support zone. All right, let's zoom in on the 4-hour time frame and see if there's any other levels that we can try and identify. No, I don't think so. I think what we've identified on the daily time frame is more than applicable for the 4-hour time frame as well. All right, okay, if that's the case, we've covered euro franc. Let's move on to oil, right? I think we just have time. Oh, actually, right. Okay. All right. Okay. So just to recap, for those of you who have may missed the presentation slides at the start. So just to recap, these are some of the key economic events this week. Obviously we had the FOMC meeting on the 13th of December, where the statement and press conference was very dovish, which sent the US dollar crashing. So that means dollar index crashes as well, and currency pairs such as the euro and pound spiked up. Similarly, we have the BOE monetary policy meeting and the ECB as well coming up in a couple of hours, and we have unemployment claims as well. So do take note. Okay, this is a quick summary of the statement and press conference by the Federal Reserve. So as you can see, this is points to a very dovish outlook by them, so which creates a lot of downward pressure on the dollar index. All right. Okay. Let's see. Okay, with that, I'm just going to launch a poll, and I would really appreciate it if you guys could give me your feedback as well, because we're always looking to improve our webinar series, be it in terms of trading the news events or live trading analysis or educational content as well. All right. Anyone else? If not, I'll close the poll in about a minute. All right. If there's no further feedback, all right, great. Thank you very much. Really appreciate it. Thanks everyone. All right. Thanks Ali, Babangida, Kioma, and Olabisi. Thanks for tuning in today and for giving your feedback as well. And do look out for upcoming webinars by IronFX. And if you have missed the earlier part of today's webinar series, do look out for it on their YouTube page. It should be uploaded pretty shortly. If not by the end of this week, it could be up by as early as next week. All right. Thanks everyone. And anything else? All right. No. All right. Okay. Thanks everyone for tuning in today, and I look forward to seeing you seeing you at the next session. All right. Olabise, you just have to go on to okay, let me see if I can find a website for you. IronFX YouTube page. Here we go. Is this the one? Yeah. Right. So as you can see, if you just type IronFX YouTube, go on to that YouTube page here. You can go on to IronFX Live TV, or even if I just go to YouTube and search IronFX, IronFX, it will bring you to their website, right? So here you can catch all the past videos as well. So this current video as well would be uploaded very shortly. All right. Okay. Thanks everyone for tuning in today. And I'll catch you all at the next session. All right. Take care. Have a great trading week. And I wish you all the best in your trading journey. All right. Take care, everyone. Cheers. Have a good evening.